What is good, Tesla family? It's Ray J back with another video, and this one I'm going to be breaking down what's going on with Tesla stock and what you should be watching for going forward. I'm going to break down what's going on with SPY and the QQQ from a technical standpoint and what catalysts are coming out for the next couple of days that could affect how the market moves. I'm finally going to talk about what Cathie Wood just said about Tesla, as she's very, very bullish on Tesla, and she has a very bold prediction about where the share price is going to be over the next couple of years. But before I break anything down about what Cathie Wood just said and what's going on with the technicals on Tesla and many other tickers, I do have to mention a couple of things real quick. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And finally, don't forget about the Webull link. The offer ends very soon. If you deposit any amount of money, you are guaranteed up to 12 free stocks. Anyways, now let's talk about the market, what's going on with Tesla, and etc. Tesla was up 6.9% for the day, a very interesting number, of course. No surprise for Tesla. But anyways, holding up quite nicely. It's currently still in a decent place. But there is one thing that's starting to concern me a little bit, and that's the fact that Tesla has a triple bearish divergence that has been developing, because if you look at the chart, it was making a higher high, another higher high, then a third higher high, but the RSI is making lower lows over and over again. Lower highs over and over again. And the MACD or MACD is doing the same thing. So this is beginning to turn into a red flag for Tesla, but there's no confirmation of Tesla breaking down just yet. But it's just worth noting. It's just a possibility, so I'd be very careful. Now, why am I suddenly shifting when it comes to Tesla? And that's because I prioritize like trading. I'm also a long-term investor in Tesla, but I buy the dips, and I'm just continuing to hold the shares, of course, for the long term. It's very easy to be a long-term investor. I mean, you're just buying these shares the more it drops. Not financial advice, by the way. But when it comes to the way Tesla's moving, okay, there are lots of these shifts in volatility that happen in a very short period of time. So for instance, right over here, Tesla was at 264. It came down, went all the way up in a much more bullish manner before getting a big rejection. It did not drop straight down to 238. It dropped down, pushed up, dropped down. Then it started pushing up, starting this uptrend. If you're watching this channel, I've been predicting Tesla would continue to uptrend. And I also told you that if Tesla smash their delivery numbers, we'd see the share price pump very nicely. That is technically what happened today, and you can see Tesla was up quite nicely, of course, but it did not just go up in a straight line. It pushed up some days, it pushed up harder on others, then it's cooled off on other days. Tesla was very flat on some other days, then it started pushing up even harder, right? So it's very, very nuanced based off the circumstances, based off the news, and based off other factors. And you can see how that affects the Tesla share price. But to know how to trade, you don't have to be a master at timing everything perfectly. It's more about, are you able to time your entries the majority of the time? And are you able to manage risks, right, when trading or doing anything like that? But anyways, when it comes to Tesla, let me just note something important. Tesla has a tendency of also being dictated by the markets, and the markets have some big factors coming out very, very soon. So what happened today, right? We had some data that came out. The PMI report came out. This was very close to expectations, pretty decent so far, but a little bit low on other ends, telling us that there is still more signs of contraction in the economy. However, looking at construction spending month over month, this was higher than expected, showing some strength in the economy. So some sectors are still doing okay, like construction, but manufacturing is slowing down a bit. That's telling us that the economy is very mixed, and the PMI reports are still showing very mixed reports. But when this construction data came out, the market was still holding up okay. It was very sideways today as we had a short day. But for tomorrow, it's going to be July 4th. The market's going to be closed in commemoration of the 4th of July. And I also hope you guys have a very good 4th of July weekend. But then after that, we have Wednesday, July 5th, okay? And during this day, we have some data coming out. We have the economic optimism report. This is likely going to be fine for the markets because consumer sentiment right now is quite positive about inflation going down and the economy not doing too horribly based off previous reports. So this shouldn't be too bad. But looking at 2 o'clock p.m. Eastern time, okay, we have something huge coming. That's the FOMC minutes. Why does this matter? It's basically like the FOMC meeting, except it's going to be on paper. A paper report of the transcripts, what the other members of the Fed were saying. And this is very, very important for monetary policy. Now, I see this as a red flag, in my opinion. I can't guarantee anything because I can't predict what this is going to cause. I really can't do that, guys. But what I can tell you is there's an increased probability that this may slow the markets down. And the reason for that is because look at what the Fed has been saying over the last couple of days. When Powell was speaking, the market slowed down a bit. Many of these Fed officials and Fed speakers have been quite hawkish. And the Fed, the majority of their members right now who are voting on monetary policy changes, most of them want another rate hike. So they may be hinting at another rate hike to come, or at least two more. And they're implying that this pause we saw was not a pause, but more of a skip. So it's very important to note this. many of the Fed speakers may argue that the economy is like way too strong and even stronger than what they expected, uh, and things like that. So that's once again not very good for us going forward. But anyways, this is just worth noting. We'll just wait and see what happens until then. For the other update coming out, we have some earnings reports. There's actually not much going on between Monday and Wednesday, but for Thursday, we have Levi's coming out. That's going to be quite important. And besides that, there's nothing else that's too huge. Now, for Cathie Wood, I have some news involving her that just came out. Cathie Wood is still very, very bullish on Tesla. She's one of their biggest fans, and she remains very, very uh, optimistic about where Tesla is going to go going forward. Now, there are some instances where she tends to sell shares. Sometimes it's reported that she sells when she doesn't. I mean, it's very, very biased when it comes to the way that her moves are reported. But the bottom line is she does this for repositioning. She does this for hedging and other things like that. She strategizes based off her overall fund. So this is nothing worth noting, because the bigger thing that's like so much more important is the fact that Cathie Wood is very bullish for the long term, no matter what anyone tries to say about her, moves in the past. So I'm still very bullish with her, but I want to talk about what she just said. So she said that AI is going to be huge for Tesla. That's no surprise to all of us. And she mentioned that the long term success is going to be embracing AI technologies, saying that Tesla is more of an AI company. And then with the Monte Carlo simulation of the modeling technique to forecast different things, ARC also conducted over 1 million simulations of Tesla. They had 38 different inputs about this. They used many econometric forecasting variables and things like that. And in doing so, they found a very, very interesting amount of future performances for the 2026 year for Tesla. And this is based off like bullish, bearish, and kind of like okay expectations based off the valuations of company shares and how Tesla has responded during previous reports. So basically, using previous data, using what they project to happen based off expectations and all these different things, they have a bunch of different simulations of what Tesla could do. And remember, Cathie Wood has made correct predictions on Tesla before. And what they basically found were three main scenarios for Tesla. Okay, the bull case for Tesla, which would mean by 2026, it actually says it right somewhere over here. I think right here, the simulation was for uh, by the year 2026 until we approach that year. It basically found that the bull case for Tesla would be $1,900 a share, 1,900 by 2026. The bear case would be just under $1,000 by then, which seems kind of crazy. And then the average price would be around $1,500 a share. That's more than a 500% increase from today's price, which is around like the $260 to $80 area. And that would cause the market cap to reach over $5 trillion. I think that's very possible. You may think that's very crazy, but looking at how the market prices things into the future and how Tesla's growing, Tesla continues to beat it continues to beat expectations, and it continues to just defy the odds moving forward. So that's some very, very awesome stuff. I'm very, very excited for this company, and I can't wait for what's about to come. Now, this is very, very bullish news, and I think that this is incredibly awesome for them moving forward. I think their growth is just so incredible, and I think Cathie Wood has a good point about it. But anyways, when it comes to the price-price ratio, Tesla's still holding up quite nicely. Wedbush has reiterated that Tesla is going to outperform the market, and Citigroup is still remaining neutral, which is pretty ironic. But besides that, we also saw some good news coming out. Tesla tends to be green about 48% of the time on on Wednesday. And finally, the short interest on Tesla was continuing to drop as we saw lots of shorts covering, but there's not enough data yet for us to go into more detail about it. Looking at the Model 3s, we saw inventory levels drop alongside the S and the Ys, but for the Model Xs, this is still a little bit hot, but that's a-okay because for now, this data does not matter as much. So far, Tesla did well for deliveries, so we're going to just enjoy this for the weekend while it lasts. Now, for Tesla, though, I do have one concern about it, okay? The good news for Tesla is, yes, it pushed up quite nicely. We were calling this move since the morning. I told you guys Tesla would likely gap up and try pushing up, and that's what happened to Tesla. It pushed up because when I recorded the video, it was around like 276 at that time, and Tesla ended up closing at about almost 280, just a little bit below that. So it basically went a little bit higher. It pumped a lot higher in the morning, came back down, then ended up pushing at the last minutes to still close quite green, up 6.9%. Now, the current trend is still quite strong on Tesla. It's holding above this area and it's trying to form a base around this like 275 zone. But if it breaks below that, there is going to be some potential for downside if it ends up retesting our other EMAs. There's going to be some support around this like 270 to 272.5 area. If that breaks, we could see more downside in Tesla. So I just want to note that 268 is also going to be some important support. If that breaks, we could fill this gap all the way down to like the 261 zone. So watch those supports very carefully. If Tesla tries to break this like 285 zone, then it could try to make its way up to about 290, but I'd still be very careful with a claim like that. Now, the reason why I'm being very cautious with Tesla is because when you zoom out, like I said before, there's a bearish setup that has developed. We have this triple bearish divergence. The RSI is continuing to downtrend, so is the MACD. I think you could also bring up like the stochastic and see the same thing. I oftentimes don't use the stochastic for this, but it is showing the same thing basically. But anyways, this is still suggesting that Tesla could see some downside soon. We could get a rejection off here. And for any confirmation of this move to the downside, watch Tesla break below 275. Below that, then it could make its way down to like 272.5 to about 270. And a break below that would give us more confirmation of some downside to come. Now, I know it's unfortunate, but it's totally fine because Tesla could cool off its RSI. It's been pumping like crazy. Remember, just a couple of days ago, this thing was at 238. Now it's almost at 280. That's a big move to the upside. A small cool off would be normal. But I went over both the bull and bear cases. I just want to note that there is an increased probability of downside because of the FOMC minutes. It's more likely to cause that because of what these Fed officials are saying, and because they may start reiterating that the Fed is going to raise rates even more, which in turn is going to slow down the economy more, which can make the recession even more severe than what the bonds market could be expecting. And as a result, the market may slow down because of that, because this would be a lot more hawkish news. It's a risk, it's a possibility, but wait for confirmation, wait to see if Tesla breaks below these important support zones just to be safe. I just want to note that, so please be calm, cool, and collected and be very careful. Now, to add on to this, on the daily chart on Tesla, it still hasn't gone a bullish cross on the PPO. It's about to get it, but like I said, there still is this clear bearish divergence on the daily. I mean, look at where the RSI is compared to where it was before, despite the fact that the price is making higher highs. That's still suggesting the same thing. But despite this, remember that this is not confirmation of Tesla breaking down. This does not confirm anything like that. This simply tells us that there's a risk of that happening based off the current setup. There's a risk of Tesla starting to slow down a bit because of the current setup. There's no confirmation of it happening just yet until we finally see Tesla break below like 275, then like 270, for instance. Just to make that clear, I just wanted to reiterate that. Anyways, for SPY, the same thing is going on the daily chart. There's a bearish divergence technically developing, and I just want to note that on the 4-hour time frame, the same thing is going on the 4-hour time frame. There is technically a double negative divergence, not a triple, but just a double, and it is losing a little bit of momentum, but it's not that bad. So for SPY, there's no confirmation whatsoever of this thing breaking down. There's no confirmation of it, and if it tries to break out, we could see 445 first. If that breaks, watch 447.5 and 450. My only concern is, what if these FOMC minutes cause some downside because of the Fed officials? If that's the case, you need to watch 442 as support on SPY. If that breaks, watch 440. It's going to be our major support. If that ends up failing, then we could see some downside. But for now, there's no confirmation of the market breaking down just yet. Now, we just have to wait and see what ends up happening. There could be a move to the downside coming soon. Could the market try to pump a little bit more because of these big events coming out because of the Fed? Could it get one more pump and then it starts cooling off? That's another possibility. But either way, there is going to be a cool off coming somewhere along the line. The odds do favor that. And we're just going to have to wait and see when we get the confirmation. It's because I can't really predict what's going to happen with the FOMC minutes. I can't really know what's going to be written before it comes out. So that's the reason why I'm just very cautious and very patient. But even if something were to happen that you don't really expect, what you could always do is look at the smaller time frames than scalp, or look at this on an intraday basis. That's actually more feasible than simply trying to predict everything. That's once again very, very doable, just looking at the current moves and the trends. For instance, you could have seen this move right here and time this bounce quite nicely, or then the complete opposite, a shorted SPY right over here off this divergence. There are all sorts of moves you can make intraday, so there's always a possibility of scalping or doing something completely different when the time is right. I just wanted to note all of this. Finally, for the QQQ, this thing is looking pretty in the middle to me, because what's interesting is we have a bearish divergence. Technically, that has developed right about here. So you can see it right here. There's this bearish divergence, but here's the big but. There's an inverse head and shoulders, and we haven't really completed this thing to hit 372.8. So we haven't really completed this inverse head and shoulders yet, so it's eventually going to try to pump more. Could the market pump more first and then see the rug pull? Or is the market going to rug pull first because of the FOMC minutes and then try to pump later on? It's got to be one of those two in my eyes. I think one of those is very probable based off what's going on with the QQQ. And I'm kind of in the middle with this one. It's very hard to tell which one it's going to be because it depends on some kind of catalyst. So we'll just have to wait and see on that. But until the data comes out, just know that whether the market pumps a little bit more and then we get like a small correction, or if the market just, starts correcting from here, it's going to depend on the FOMC minutes. And like I said before, I would love to be a fortune teller. I would love to be able to see what they're about to write before it happens, but I really can't do that. So I'm just going to be prepared to react to this. I'm going to know what the risk is, and I'm going to be very careful. What a lot of traders do is they basically trade in the morning, then they exit all their positions in terms of like options. I'm not talking about like shares or anything like that. They exit their options. They sell them. They just get out and they just wait. They be patient and they wait for the FOMC minutes to come out. The moment they come out, then they'll know which way the market's going. Then they can always just scalp again or re-enter some kind of trade. That's going to be like another strategy. That's like another thing you could just keep in mind just in case. And my job right now is just to remind you guys about what the risks are. There are risks involved when it comes to trading and entering a certain position at a certain time. So please note this, be prepared for this, and I just want everyone to be ready. All right? So thank you all so much for listening. We will talk more about the specific levels on Tesla intraday on Wednesday anyways. I'll be here for you. I'll prepare you guys anyways, and I'll see you guys very soon for the next videos. Until then, remember the market's going to be closed for tomorrow. There's no trading for the 4th of July, which is Independence Day here in America for the overseas people out there in like Europe or other countries. In Asia or wherever you guys are. But just know, no matter where you are around the world, you are appreciated. And for all my Americans and anyone who celebrates the 4th of July, use this as a time to be very grateful. Have an absolutely splendid 4th of July. Enjoy your time in America or wherever you are. Have an absolutely fantastic rest of the day, and I'll see you guys very soon. Tesla to the moon, as the long term is still incredibly bright, despite any fluctuations that still could be developing. And peace out.